Very good morning. These are the top business stories live from the Sky Newsroom. Energy bills are set to rise in January and stay high until the summer. A surprise fall in retail sales as customers spend less because of budget fears and the weather. Plus, Bitcoin soars closer to $100,000 as Donald Trump's election win sees it rocket by some 45% in just a few weeks. Hello and welcome to the programme Business Live with me, Darren McCaffrey. Well, it's been confirmed that energy bills are going to rise again with the new energy price cap announced for January. It will rise to £1,738 from the current level of £1,717. That's an increase of 1.2%. It will see the average household bill increase by around £1.75p per month. Well, energy prices are expected to remain high into next summer, according to analysts Cornwall Insight, which has provided accurate forecasts of the recent price cap in recent years. Well, joining me now is Dalra Vias, who's the Chief Executive of Energy UK, the trade association body for the industry. Very good morning to you. I suppose my first question is, when you look at the underlying figure here, just over 1%, doesn't seem like a big increase.
No, but I think it's more about the fact that it demonstrates that we still have quite reliance on volatile fossil fuels, and it's really important that we are thinking about how we can have a more stable market, and investing in clean homegrown power means that we'll be less reliant on that, and we should be able to have more stable pricing.
In saying that, as you say, it is part of a wider increase we've seen. We're now in a cold spell, and we have got millions of pensioners now not getting the winter fuel allowance. It is going to be tough for people this winter, isn't it?
You're absolutely right. Energy suppliers are really concerned about what this winter might mean for so many of their customers. We know that we have got a higher number of customers than ever before in debt, and the debt that they owe is greater than ever. So we've got about £3.7 billion of debt owed to energy suppliers. On average, that's about £1,200, I think, on electricity and £1,400 on gas. You know, we're talking about quite significant sums of money. Debt's an issue, and being able to afford to pay for the energy you need to use is a real concern. It's an essential service. We all need to use energy to keep safe, warm, comfortable in our homes. And it's really important, I think, that we talk to government, and we're working with government to try and make sure that we're talking about how to better target help and support to people who need it most.
And Dara, just on that point, how are you helping people? I know there's this idea of £500 million. Talk us through what that is and who is it being directed at, or how can people make use of it?
Yeah, I'm glad you brought that up. So this winter, energy suppliers are making more available ever than before in terms of additional support for customers. The main thing that I think is really important to stress is that suppliers can only help people based on what they know about them. So if you're struggling to pay, if you're really concerned about it, contact your supplier, tell them what's going on. They can give you support. They can talk to you about ways to reduce your energy. They can talk to you about how they can give you direct cash support or energy efficient appliances. There's lots of different things they can do to help people save money and manage their bills over this winter.
You talked there about debt and how much individuals are now in debt, but that weighs on energy companies too. I mean, at what stage does that start to become troublesome, not just for the individuals, but for the energy companies themselves? I mean, some of them who are already under quite a lot of strain.
Yeah, absolutely. It is already causing problems for the energy retail part of the energy industry. It's the lowest margin bit of the sector. And the reality is we need the retailers there. They're the ones who communicate with customers. They do the billing, they deliver everything, they do the customer support. They're also going to be really important when it comes to making sure we can do everything we can on the clean energy transition to get our buildings in better shape, to decarbonise heat, to improve energy efficiency, and to make sure we're doing things smartly, so we can use energy when it's most abundant on the grid and cleanest. So the energy retailers play a really important role, and they're under a significant amount of pressure right now when it comes to their margin and being able to really attract investment so they can innovate.
And what would you say to those that talk about the cap itself and say that actually it's distorting the market? Yes, for a short period of time, it can hold down bills, but in the long run, actually, it's detrimental to the industry. It's going to create bigger problems and maybe higher bills in the future?
I think what's certainly true is that we need to review the cap. It is over the energy crisis. What it did was it did something it was never intended to do. It was introduced to try and tackle what was known as the loyalty penalty because people weren't engaging and switching. The reality is we're moving to a future where people will need to engage with and should engage with energy in their homes in lots of different ways, not just about sort of switching once a year. So I think that we do need to look at the cap and see if it's fit for purpose for the future that we need.
OK, Dara Vyas, Chief Executive of Energy UK. Thank you very much indeed for joining us this morning. Much appreciated. Thank you. Well, budget fears and unseasonably warm weather have meant that customers have spent far less than expected in the last month. But consumer confidence is improving in November, according to separate research, which suggests that shoppers are ready to spend big again on Black Friday and Christmas. In a sign of slowing economic retail sales, they fell 0.7% in October, according to the ONS. That's a bigger fall than the drop of 0.3% predicted by many economists. The main fall-off was in buying clothes. That was down 3.1% over the month to October, as temperatures remained above average for last month. Spending had risen 0.1% in the previous month. Let's speak to Helen Dixon, Chief Executive of the British Retail Consortium, who is with us this morning. Good morning, Helen. I mean, there's no way to dress this up in any other way. These figures are disappointing.
They are disappointing, and I think we saw certainly the feedback from many retailers was that there was some pre-budget jitters for households, and as you highlighted, it was clothing and fashion that was particularly hard hit because of some of that. Seems like a long way now, given how cold it is, but quite mild weather that we saw in October. Other big ticket items like furniture and home still faring fairly badly. There were some highlights, so strong performance across electricals, across health and beauty. And the real hope now is that that confidence that you suggested translates into a good Christmas and a good Black Friday period, because this is the golden quarter, as many retailers call it, very, very important part of the trading calendar and really critical as we move into 2025.
We talked about the weather, didn't we there, Helen? But we should also talk about the budgets. Was that a factor? You think people were concerned, maybe reining in spending, awaiting that budget?
I think there is a degree of that. I mean, obviously, from the retailer's point of view, the budget itself was a real body blow, particularly the national insurance, because that hit industries that are large employers, employ a lot of part-time people on entry-level roles, particularly hard because of the change in the threshold of national insurance. And we're seeing that at a time when a lot of other costs are coming in. So the implementation of the national living wage, there's lots of regulations coming down the pipeline. So retailers themselves are dealing with the consequences of that. And I'm sure that will translate into consumer preferences as well.
Well, I suppose that's where I was going to lead to next, in the sense that the retail industry, once it gets beyond, as you say, the golden period of Christmas, I mean, it may well struggle in the new year, not just got to do with consumers and how much they're spending, but clearly that extra regulation and those much higher taxes.
Yeah, I mean, earlier in the week, we coordinated a letter that was signed by over 80 retail leaders that sort of gave a real sense of the strength of feeling right across the industry of the significance of dealing with a cumulative effect of new costs all coming in over such a short timescale. And the real risk is that we see some job losses or a bigger risk of inflation going back up into 2025. And so what is really critical now is the engagement that we have with government about mitigating some of the negative effects, the negative consequences that could otherwise crystallise if action isn't taken on some of the things around the timescales for these new regulations. Like we've got some new packaging levies that are supposed to be coming in next year. We've got some business rates changes. We need to make sure that those actually deliver the objective of sort of stimulating investment into high streets and town centres rather than doing the opposite.
OK, Helen, appreciate your time this morning. Thank you very much indeed. Helen Dixon there, Chief Executive of the British Retail Consortium. Thank you. Now, wearable health tech has grown to become a multi-billion-pound market with a wide choice of watches, Fitbits and rings. This week, the health ring producer Aura was valued at $5 billion as it announced a new deal with the glucose device maker Dexcom. It means that Aura users will eventually be able to monitor their blood sugar. Well, let's speak to its chief executive. That is Tom Hale, who joins us from San Francisco. Very good morning, or as probably should say, the middle of the night to you, Tom, there in San Francisco. Just talk us through what you guys do, if you like. We know this has been a big growth industry, isn't it? Kind of wearable, high-tech products.
Yeah, what we do is we make a smart ring that you wear on your finger. It's very light. It's made of titanium. It has an 8-day battery life. And in wearing it, you start to give your body a voice. You learn things about your body that maybe you didn't know. You see different metrics like your heart rate variability. We track sleep incredibly well, so you learn how to sleep better. The thing is that something like this that's so small and so easy to wear fits right into your life, and then you start to learn how to make healthy choices and healthy behaviors. This is the essence of all wearables. They're making people healthier by giving them the tools to make healthy choices and to form healthy habits.
In saying that, they also can conversely do the other way. I read the other day someone who had a device that monitored their sleeping, and because they weren't sleeping very well, but kept waking up in the middle of the night to check the device to make sure they were sleeping well. As in, can sometimes these things be a bit counterproductive?
Well, you know, in our case, we're really focused on making this thing as unobtrusive as possible. It doesn't vibrate. It doesn't, buzz. It doesn't have a big light. It doesn't have a big screen. It doesn't give you notifications. It's really oriented actually around your mental health. One of the things that we know is that if you have too much information and you become too obsessive, that's actually counterproductive. I mean, think of how the world is obsessed over their smartphones. We take a very different approach. We think of ourselves as something, like calm tech. We're there to help you get through the day, not to drive you to higher levels of activity. In fact, one of the features, I use it this week. I was traveling in the UK, and on Sunday night, I started getting a little sick. And I looked at my app, because the ring comes with a smartphone app, and it said, you are not doing well. You should go into rest mode. And in rest mode, they take away your activity prompts. And I literally spent the next day in bed, pounding fluids and getting rest. And I was able to actually show up for a meeting on Tuesday in London and feel great. And it's that little bit of awareness and that little bit of change that is really so important. It's all about keeping you healthy, not trying to keep you obsessed.
Let's talk, though, about the hard-nosed business bit, if we can, for a second,
Sure.
Tom. And I'm reading online that your Generation 3 ring is at a record low on Amazon. Why is that? Is that because sales are being sluggish, or that you think that you can do well in the lead up to Christmas?
We know that the Christmas season is a huge season. It's already underway here in the U.S. We've sort of commenced our Black Friday sales. We introduced a new version of our ring called the OR4, Aura Ring 4, and it's doing great guns on Amazon. It's smaller, lighter, thinner. It has a longer battery life and has improved sensing. So we're actually seeing tremendous uptick just even in the last few days as the Christmas season starts in around the world.
Just very finally, Tom, you've just been in the UK. We've just had a new government here. I'm sure you're aware of kind of the economic situation. What's the view from the outside? What's the view from San Francisco? You're a tech company. When you look at the UK, you look at our economy, you look at our politics, do you think the UK is in a good place? Think it's a good investable place? Or has it got problems you see elsewhere in Europe?
I'm no economic expert by a long shot, but I'll tell you some observations that I've had because I've been traveling to the UK a lot. We recently launched in June with our partner John Lewis. That's where you can go to get the Aura Ring. We have noticed, I think, a pretty interesting uptick in changes in behavior in the UK. The first one is actually health-oriented behaviors. I don't know if this is COVID or generational change, but I'll tell you, when I walk the streets of London, I see more people running than I have in my 30-year career of visiting London. There are more people just jogging through the streets. And run clubs, as you probably know, are like through the roof. So the first thing I think about the UK is that I think health consciousness is rising. Now, in terms of the economy and in terms of how people are doing, I think it's a relatively difficult situation. But one of the things that we really strive to do is provide so much value to someone who puts the ring on. Whether that value is something like monitoring for some kind of issue that you might be worried about, whether it's using it as a digital contraceptive in partnership with our partner Natural Cycles, or trying to just get your sleep life together after having kids or being stressed from a busy job, or wanting to age gracefully. What we see is that people want to care for each other and they want to use tools and technologies to improve their health.
Okay.
And frankly, for a small investment, that helps.
Okay, Tom, well, you certainly didn't see me running out about in London, that's one for sure. I probably do need to take that up, though. But, Tom, appreciate your time, particularly so early in the morning there in San Francisco. Tom Hale, thank you.
Thanks, Darren. Take care.
Now, it's perhaps the most recognisable name in the video games industry. World of Warcraft today celebrates its 20th birthday. But the gaming industry has faced some turbulent headwinds in recent years. So after 2 decades of slaying orcs, trolls and dragons, how is the gaming world looking in 2024? Let's bring in Ian Costas. He is the game director of World of Warcraft at Blizzard Entertainment. Ian, very good morning to you. It is an iconic game. I have to say, I'm going to be perfectly honest here, I am not a gamer, but I am very aware of World of Warcraft. Why is it? Why has it survived and thrived in many ways over the last 20 years?
Good morning, Darren. Pleasure to be talking to you. Well, yeah, I mean, it's been quite the 20-year journey. It all begins with, I think, that magical moment when it launched 20 years ago, almost to the day, on November 23rd, 2004. And really, it was a compelling world that really, just kind of pulled people in and introduced them to the possibilities of, fantasy and adventure, but also social connection. The game launched at a time when really social media was just kind of coming into its own, when people were getting broadband internet connections in their homes for the first time. And really, for many people, it was quickly more than a game. It was a chance to connect with others, not just your friends down the street, but people around your country and people around the world.
But this is also a game that has changed a lot, hasn't it? And it also is a game now that faces a lot more competition than it did way back in 2004.
Indeed. And so I think from that strong start, the reason why we're still here 20 years later is just constant evolution. It's, listening to our players and growing with our players. Many of our players have been with us for that full 20 years. Then there are other new ones coming in every day. And I think if we had stayed, where we were 20 years ago, we wouldn't be here having this conversation today.
In saying that, what is the health of the gaming industry in general? I mean, a lot of people may well have taken it up during the pandemic, having maybe not played it before. But is the industry managing to sustain genuine growth?
I think very much so. I think gaming really is, strong and part of the cultural mainstream more so than ever before. I think when you count all the platforms that people game on, including, just taking your phone out of your pocket while you're waiting for a meeting to start, while you're waiting on the train, far more people engage in gaming than I think at any time in recent history.
In saying that, there have been job cuts recently, quite a few actually in the last year or so. I mean, that's not a sign, at least externally, of a healthy industry.
I mean, I think there have been broad challenges, but I think the demand for games is continuing to grow. And, I think as people move around the industry, they find new homes. We've had a ton of people join the World of Warcraft team. It's a team that really we've continued to invest in recent years. And, I think we see the prospects as very bright. And as a gamer myself, I think it's exciting looking ahead across the industry at all the titles coming up in the year ahead and beyond.
OK, Ian Costas there from World of Warcraft. Fascinating talking to you this morning. Also live in California. Appreciate your time. Thank you so much indeed for
joining us. Chatting. Thank you.
Just going to bring you up to date with some breaking news that we've brought you in the last hour. Now, revolves around Gatwick Airport and the South Terminal. The police have issued a statement, Sussex Police, in the last couple of minutes, saying that they were called to the South Terminal at around 8:20 a.m. this morning, the discovery of a suspected prohibited item in luggage. They have closed down, effectively, that part of the terminal, and the explosive ordnance disposal team have been deployed to the airport as a precaution. Fundamentally, what is happening is that this is causing a lot of disruption. Roads around the South Terminal have been closed. The terminal itself has partly been evacuated, and the public are being told to avoid the area. So Sussex Police saying they are dealing with this incident, but effectively you should avoid Gatwick South Terminal and the roads around it for the time being. OK, you're watching Business Live. We're going to be back in just a couple of minutes with a look at how the market's doing. The FTSE up a little. All the details after this quick break.
Prime Minister Modi is the most popular politician in the country. He is expected to win his third term in these elections.
Jubilation in the streets, while some emotional.
This is a political victory for Prime Minister Modi and his Hindu Nationalist Party, a promise fulfilled. I'm Neville Lazarus and I'm Sky's reporter based in Delhi.
He paid over 50,000 to traffickers to get him to America. Instead, he was kidnapped, tied up and threatened by smugglers. A commando from the state force walks me through to a Mai Tai village on the front line.
Firing to civilians and they're burning our house.
We cross to the opposite side, held by the cookies.
When they fire, we have to retaliate.
Sky News get the full story first. Companies like these are helping India in its trajectory to be a serious player in space exploration.
The enthusiasm is palpable. The young desire change.
These elections are a pivotal moment for the country's economic and political history. The concern here is that the public healthcare system is inadequate.
In a prayer, she's asking God to help understand what happened. I cannot carry on. God, help me. He says his world has crashed. Like him, there are scores of families searching for their loved ones.
Too often have families endured such tragedies for the negligence not only by the administration, but also by spiritual people in this country. Free wherever you get your news. Even though it has few seats in Parliament, Kashmir is symbolic and very significant. It's often been called a nuclear flashpoint.
This may be the Premier League.
I'm not like everybody else.
But this duo have been in a league of their own. It's Haaland, a striker like no other.
Like everybody else.
Son, Starman, the Tottenham Hotspur.
Like everybody else.
That's just stunning. Wow!
Everybody else. Like everybody else. Like everybody else.
Manchester City, Tottenham on NBC and Peacock.
Very welcome back to Business Live. Let's have a look at the markets on this Friday morning. And global stocks have risen following gains on Wall Street, boosted in part by better than expected results, particularly from the chip giant Nvidia. But Asia closed very mixed. In Europe, all the main indices are in negative territory. Here, the FTSE 100 is up 0.66% in early trading, despite a surprise fall in retail sales that we talked about a little earlier. Let's look at the currencies. Pound down again quite significantly against the dollar today at 0.62%, 125, up merely a fraction against the euro. And finally, the oil price, which is heading for a weekly rise of around 5%, down a little this morning, just under $74 a barrel. Well, let's bring in Daniela Haythorne. She's Senior Market Analyst at Capital.com. Very good morning to you. Let's start, if we can, though, about Bitcoin. It just continues to go up and up and up.
Yeah, I mean, everyone has their sights set on a very key round figure, the 100,000 mark. That's something that everyone's been gearing up to. And it feels like we're kind of stuck in a bit of a short squeeze where investors are just trying to push and push higher until we get to that level. Now, exactly what's going to happen when we get there is a little bit of a mystery. But of course, everything that's powering Bitcoin higher is essentially investors now believe that the Trump administration is going to be this golden era for cryptos, with Trump bringing on so many crypto fanatics into his team. So it looks like we could continue to see appreciation in the crypto industry, but they have become very expensive, specifically ones like Bitcoin. They are highly speculative assets as well. So definitely something to watch out for. But in terms of the short term, 100,000 now seems completely within reach. Do we go further than that? That's the real question here.
Well, it is, and you call them fanatics there. I'm sure many would agree. My fundamental point is this could also be a bubble, effectively.
Yeah, as I said, highly speculative assets, and we do see really, really rapid moves, and we could see something that sparks the complete reversal in this momentum that we're seeing over the last few days. It could be the case of once we get to 100,000, a lot of that drive that has been pushing the Bitcoin higher, the price of Bitcoin higher, suddenly starts to flare out and to deflate a little bit, and we do see that bubble action. As I said, it's such a psychological important number. We haven't been there before. We're so far off where we were at the beginning of the year. It's quite hard to figure out exactly what's going to happen. But if you look at the fundamentals in terms of the Trump era and Trump's support or seeming support for cryptos with his surrounding team, it looks like we could continue to push higher.
Well, one company I think we can say is not a bubble, or the share price isn't, and that is Nvidia, who are doing very, very well, unsurprisingly, given the chip markets.
Yeah, look, we saw Nvidia beating earnings and revenue. They beat expectations. The thing is with Nvidia, and we're seeing that in the share price, we saw it yesterday. We saw that seesaw action, those highs, those lows, a lot of fluctuation. And it looks like the share price right now is struggling for a little bit of direction. And I think the issue here is everyone was expecting Nvidia to beat the headlines and the earnings and revenues. The thing is, how do you surprise investors? How do you entice investors to want more when we're at a time where we've seen these big tech companies surprise continuously quarter after quarter? Yes, they revised their Q4 expectations higher. We've seen Q1 for next year also look surprisingly good, but it's just how do you entice them to buy now? The stock is expensive. Also at a time where investors are starting to question, is this really the age of AI? We've seen some companies struggle to monetize on their AI investments, like Apple. And, you know, the CEO saying, yes, this is our era of AI, but we just don't know.
Daniela, as always, really appreciate your analysis this morning. Thank you very much indeed for joining us. OK, that's it from me on Business Live for now. We're back, of course, at 4:30 this afternoon. Stay tuned for the very latest news with Wilfred up next, including the situation at Gatwick Airport, the South Terminal evacuated, the explosive police are there. More details at midday.